What's up, everyone? Clayton here. I want to talk about the CARES Act and how incredible the CARES Act is for real estate investment. Now, if you were sitting on the fence thinking about investing in real estate and you had some money tied up in a retirement account, but you thought, I just can't get access to it, I gotta wait, the CARES Act may be your knight in shining armor. Of course, the CARES Act was passed by Congress and signed by President Trump at the end of 2020. And there were some really nice nuggets in there if you wanted to invest in real estate in a kind of a roundabout way. The way that you could invest in real estate is by using your 401k or other retirement plan. So what the CARES Act did, it allowed you to take out more money than you would normally be able to take out of your retirement account without penalty, and being able to defer those taxes over a number of years. So let's break this down and go a little deeper here, what this means for you to be able to access this money. One of the first pieces of this legislation I want to talk about is that if you are a qualified investor, you have now 60 days that you're allowed to roll over retirement funds and access that $100,000. So if you're taking a distribution from a retirement account that's paid directly to you, you can roll that over into a self-directed account. The best part is that now you can take up to $100,000 and use that to your advantage. The benefit is that you don't have to pay taxes. You used to have to pay taxes on that money. Now you don't. You can use it to your advantage to invest in real estate. But here's the caveat. You only get to do this until the end of 2020, unless Congress extends that deadline. So take advantage of this in the calendar year 2020. Now imagine you have $100,000. Like with our company at Morris Invest, that would be like 2 down payments on 2 separate rental properties. So imagine taking $50,000 and $50,000. That would be like 2 down payments for rental properties. And that would cash flow anywhere from $2,500 to $3,000 a month per property. So now you've just taken that $100,000 in your retirement funds that you now have access to thanks to the CARES Act. And you could break that up and use that as 2 separate down payments to buy a cash flowing rental property, brand new construction. This is a game changer, folks. I hope that you're taking advantage of this. So I want to read directly from the IRS's website so that there's no confusion about exactly what this CARES Act says. It says, in general, Section 2202 of the CARES Act provides for expanded distribution and options and favorable tax treatment for up to $100,000 of coronavirus-related distributions from eligible retirement plans. Certain employer retirement plans such as Section 401k and 403b plans and IRAs to qualified individuals, as well as special rollover rules with respect to such distributions. It also increases the limit on the amount a qualified individual may borrow from an eligible retirement plan, not including an IRA. And it permits a plan sponsor to provide qualified individuals up to an additional year to repay their plan loans. So if you're just borrowing from these plans, you would then be able to pay them back over an additional amount of time. The benefit is, though, that if you are going to take this out and get the penalty for anything, you get the opportunity now to pay this back over 3 years. The beauty of this tax penalty that you would get is that you get to spread that out over multiple years, therefore eliminating your overall taxable burden. Now think about it. When you buy a rental property, like if you work with us and you buy one of our rental properties, you'll receive a cost segregation analysis associated with that rental property. Now that's something that you can take to your CPA, and you're able to accelerate the depreciation of your rental investment in this calendar year. That means that you would be able to offset those taxes considerably in this calendar year just by investing in real estate. So the CARES Act allows for you to use the funds that you already have at your disposal. Instead of $50,000, now it goes up to $100,000 without tax penalties in this calendar year. You're also able to pay back your loans if you're doing it in the loan form for a longer period of time. This is just a killer strategy. I hope that you take advantage of it. Remember, time is running out to use this CARES Act provision. Remember, by the end of 2020 is when this will dry up. You will not have access to it unless Congress expands on that. We have a deep dive video here on the channel which goes much deeper into how to use your self-directed accounts as well as cost segregation analysis and is it worth it? Very important for you to understand if you're a real estate investor and all of the tax benefits that come with it. So go check out that video. We'll have a link in the description below, and we'll see you in the next video, everyone.